Today is Friday, October 21st, 2016, and this is the ADM Investor Services Weekly Market Review. Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Steve Freed, Vice President of Grain Research. Alan, the European Central Bank at its policy meeting yesterday kept its quantitative easing program and interest rate policies unchanged, as expected. However, selling pressure quickly emerged in the euro currency when ECB President Mario Draghi said an abrupt end to the central bank's quantitative easing program is unlikely. What is the outlook for the euro now?
Okay, what apparently has happened is the currency wars are still on now, and this comment from Mario Draghi indicates that he would like to see the euro currency continue to decline, and I'm thinking possibly due to their desire to enhance their trade situation. So the euro currency most likely will, I would think, drift lower. I don't see any huge declines now since we did see some very serious breaks over the last couple of days. So I would look for a sideways lower market in the euro currency. But one currency we do like is the Australian dollar. We think commodity prices are going to continue to advance. We think China is going to perform much better than most analysts believe. And so Australia should be the prime beneficiary of those two conditions, so we like the Australian dollar from the long side outright.
Third quarter corporate earnings season unofficially started on October 10th, and analysts are predicting earnings for the S&P 500 companies will decline 1.6%. Will another quarter of declining corporate profits finally reverse this bull market in stock index futures?
No, the reason is that, of course, earnings are extremely important, but many analysts and traders are looking past the earnings reports. They're concerned more with the interest rate outlook, which still remains extremely accommodative and is likely to stay that way for quite some time. So the bull market is still intact for the indices, and I would expect to see some new highs across the board in all of the major stock index futures next year.
Then the 30-year Treasury bond futures fell to a 5-month low late last week. There was, however, a limited recovery this week as prices for some commodities declined. What is the outlook for the December 30-year Treasury bond futures?
Well, the outlook is still lower from what we can see, and we're believing that inflation will become more and more of a problem, even though it is not talked about much now and apparently is not a huge problem at this point, but we think that it will be a big problem down the road. So I think this is a great opportunity right at these levels, right around the 165, 166 area in the December bonds to put on short positions. Ultimately, I think within the next couple of months, I think we can see a move down to 160. So trade the bonds from the short side.
Great. Steve, this week corn prices failed to trade over key resistance. Why and where are corn prices going?
I think this week we ran up to some concern that prices are just too high given the global situation, and that we just didn't have enough emphasis to go over and trigger the fund short covering. Now, cash-wise, the basis firmed up a little bit. The farmer probably has slowed down selling, but it sounded like on the export side, whether it's because of the higher dollar or competition for feed wheat, that our export demand is slowing. And I think prices are going to stay in this trading range. You know, we've established maybe a low around the 340 area, but we've also established a high around the 360 area on December corn.
Okay, and what about 2017 corn?
It was interesting this week in that one group came out with an early estimate for acres next year, and they've got acres down about 3 million from this year. And while that's a response maybe to the lower prices, it may not change the carryout enough to rally prices.
And what should farmers do?
This week, there were quite a few analysts that suggested that farmers should increase cash sales for both 16 and 17 and actually start selling for the 2018 corn crop.
Soybeans also found resistance at a key price level. Still, prices are above where the oversupply fundamentalists suggest. Why is that?
You know, there's a really good debate going on between the fundamentalists who are bearish because of the higher carryout and also because of the outlook for good South American crops. But it seems in the macro things, we're seeing money come in and buying soybeans because of the record demand and also because of La Nina. We're starting to talk about La Nina and the impact it might have, especially in Argentina weather this winter.
And what is the U.S. fall weather pattern and impact on the 2017 wheat crop?
The National Weather Service came out with a 30 outlook for November for warm and dry conditions across most of the Midwest. So we're going to have to watch the southern plains where we're planting the 2017 winter wheat crop. Right now it's dry down there, windy, and temperatures are above normal, and that could stress the crop.
There is new talk about currency war. How does this impact grain prices?
You know, it's interesting because, like Alan was talking about, in that he really sees a higher potential commodity prices. But short term, when we look at a higher dollar, it could offer some resistance to commodity prices. We're seeing that copper is kind of lower, sugar has turned lower, and there is some concern that we could actually see some weakness in commodity prices because of the higher dollar.
And finally, what's hot and what's not?
Well, obviously the dollar's hot, and we're concerned about copper, we're concerned about sugar. We've seen cattle trying to make a bottom after a steep decline in prices, and right now you would have to think that maybe soybeans and soybean oil might find a little bit of support because of the demand outlook.
Great. Please remember that the opinions expressed here today are solely the opinions of our guests and are not necessarily the opinions of ADM Investor Services or Archer Daniels Midland Company. If you have any questions or comments or would like to know more about our services, please contact us at www.admis.com.